The first time I heard about Peloton stock, I thought it was one of those kind of, pump and dumpy kind of meme stocks that was just gonna be another failed IPO. Turns out I was wrong. Turns out they're doing really well. Subscriber growth is growing, their stock price is growing. Do we still have more to look forward to in the future of this company? A quick look at their stock chart here shows a bit of a choppy start, but generally a pretty smooth trend all the way up to $100 where we are now, after hitting lows as low as $17. For those of you who don't know, let's take a look at who Peloton is, what they do, and how they're kind of revolutionizing a whole kind of new market segment. So as you know, with the world being on lockdown, many people now being stuck at home or preferring to be at home, especially avoiding things like the gym, where sweaty people leave their bodily fluids all over the place. Peloton, arguably impeccably timed, went public last September. They offer the largest interactive fitness community and platform. So basically the way it works is you would buy a workout cycle or a treadmill, and they include TVs, and you have to pay a monthly fee. Basically, you get access to professional trainers and athletes running programs that you participate in. Some of them are live, some of them are pre-recorded, and basically it's fun and exciting because there are so many other people involved. Peloton says they have 3.1 million users now. They've been growing really well, and we'll get into those growth numbers here in a minute. But generally speaking, they've become the biggest fitness community in the world now. And I think with lockdowns continuing in some areas, and a lot of people being, not really super comfortable going back to the gym, I think it might be safe to assume that there's gonna be growth coming on the horizon. And it's probably also safe to assume that there will be more competition coming into the picture as well. I'll get more into Peloton's moat and some of the competition we need to consider towards the end of the video. So on top of the exercise programs that they offer, they've also gamified things a little bit to add a leaderboard. So basically you can keep track of your workouts, you can keep track of your growth, and you can be comparing those against the whole community of 3 million some users who are on Peloton's leaderboards. This adds a bit of fun and competition, and generally speaking, myself included, when competition's involved, it's really easy to push myself harder. They've put together kind of like a little intro video on the front page of their website, which I'll put up here, and it shows basically people trying really hard because they're being led by a professional trainer on this huge screen right in front of them. And that's a little bit different than typical, biking in your family room type experiences. You may have heard of other programs like SoulCycle, which are basically workout gyms with a bunch of stationary bikes and like a really energetic instructor. And SoulCycle has also been growing in popularity, but unfortunately you have to be in a room with other sweaty people. So probably not doing as well as Peloton is right now. But you can kind of maybe simulate some of that experience because you're participating in classes with other actual humans all at the same time in the comfort and safety of your own living room. So Peloton boasts an extremely low churn rate of only 0.75%. So a low churn rate basically means that very, very few of their users are leaving or quitting their service. Check it out here on the screen. We have a bunch of their bike models going from bike basics and including different gear and different equipment. The bike itself starts out at $18.95. And if you get the bike family, which includes a bunch more gear, we're looking at $23.45. Similarly, here are some of the treadmill offerings, which is coming up soon. The basic one is $24.95, and the Tread Plus is $42.95. The differences being more running space, shock-absorbing belts, 32-inch touchscreen instead of only a 24-inch touchscreen. And so you take a look at some of these numbers and you kind of realize what part of the market they're going for. Obviously a very affluent target market. The average Joe probably would just kind of laugh at these prices like I did when I first heard about Peloton. And the tricky thing is that even after you pay this price, they come and deliver the thing and set it up in your house, but basically you need to be paying a big monthly fee going forward into the future. Interestingly, you can choose to finance the equipment rather than just paying it all up front, and the prices work out to be the same. So you're not going to be paying any huge financing fees or rates or anything like that. And some could argue that that's really generous of them. Some could also argue that everybody is being ripped off equally. Depends on how you look at it, but either way you slice it, it's a very premium, a very expensive product. A couple weeks ago I did a stock analysis on Lululemon, And I think we're kind of thinking about a similar kind of target niche, quite affluent, quite wealthy people, and therefore a more premium type product. I don't think any of these companies are aiming immediately to just, be in every single house in America or something like that. So it seems like the bike and the treadmill are their main products, but they do also offer dumbbells, and some of their training programs have you like running or biking and then stepping off and then doing stuff with the dumbbells and things like that. So it seems to be not just like a SoulCycle bicycle or cardio centric workout. By adding in different kinds of weight training, it becomes kind of a more holistic workout. And management has also mentioned in their recent earnings report that they're going to be hiring and working with more researchers and doctors to start adding on more programs, even programs that deal with brain health and things like that too. So Peloton generally works on what's called the connected fitness program, where you buy the equipment and then you're also going to be paying month to month going forward for however long you want to be using the equipment. They also have another segment called digital subscriptions, which basically, like, you don't have to have any of the equipment, but you can still pay a monthly fee and access the workouts on your phone or on your TV or things like that. And so when we're looking at some of the numbers that they present on their quarterly earnings, it's important to differentiate between those two. And I think also when looking at competition that we need to evaluate in the future, it's also important to evaluate between those two. Let's take a look at some of the numbers that they provided in their most recent earnings report. Fiscal year 2020, they ended with 1.09 million connected fitness subs, which is up 113%. So those are people who buy the equipment and then they're paying the monthly subscription. Check it out, they've provided this chart showing the connected fitness subscriber growth going up really good percentages each quarter. For digital subscriptions, they grew over 210% to more than 300,000 users. And as mentioned earlier, the total number of members, which is digital subscriptions and connected fitness subscriptions and probably free users or people who are like on hold or things like that, all works out to be about 3.1 million users. Let's take a look at some of the revenue figures. For the fourth quarter, total revenue grew 172% to $607 million. And for the entire year of 2020, total revenue grew 100% over last year to $1.8 billion. Here's a chart showing the total quarterly revenue. And again, really nice growth numbers, especially in the last 3 quarters. Interestingly, they also mention how subscribers are using their apps. So here's a chart that shows the average monthly workouts per subscriber. And you can see over the quarters, the average number of workouts a user is doing per month is growing significantly. Like even just from quarter 4 compared to quarter 2, it's doubled. And so the way subscriptions work is that you pay per household. So it could be that more and more people in the household are starting to use that subscription and take advantage of it. And it could also mean that users are starting to benefit from it more, get more used to it, making it a part of their daily life more comfortably, and therefore bringing up loyalty, which also probably affects their churn numbers, which I alluded to earlier in the video. So when we see the average workouts per user per month going up like this, that's a really good sign to say that people are really satisfied with the product, and probably word of mouth will be in effect, and probably the network effect will also be in effect, and therefore probably profitability will be growing into the future as well. Let's take a look at the fourth quarter gross profit margin. It grew 47.6%. The gross margin for connected fitness subscriptions was 45.3%, while the gross margin for digital subscriptions was 56.8%. Fourth quarter net income was $89 million, which works out to 27 cents per diluted share. Last year, they were pulling a GAAP loss of $2.07 per share. Adjusted EBITDA was $143.6 million, which works out to an adjusted EBITDA margin of 23.7%. So if you haven't heard of EBITDA before, it's basically a really clean and easy way to compare apples to apples, profitability between companies or within a company to previous quarters. So it stands for earnings before income tax, depreciation, and amortization. So the tricky thing is that sometimes you might take a bigger hit on depreciation for like factories or real estate type things, amortization on real estate in one quarter than you would in another quarter. But EBITDA is like calculated before all of that stuff. So it's really easy to compare apples to apples. So when we're looking at the quarter, not the entire year, after-tax income still works out to be negative 70 million. And the net margin works out to be minus 3.9% after we do include all the taxes and other expenses not mentioned in the EBITDA. In Peloton's report, management also projected a 96% revenue growth for the coming year. So I've been looking into a lot of different stocks recently, and one of the really tricky things we need to be careful of, especially when they're really kind of trendy, really hot stocks that have gone crazy in the last couple of months, is that you don't really know how much of the future earnings is already calculated into the stock price right now. And so when you're looking at a company like Peloton, who's like blowing expectations out of the water and growing really quickly, we need to stop and kind of be cautious about like how much of this is actually already baked into the price or not. When looking at the price to sales ratio, we're still seeing above a 15, which is pretty high for this segment. But compared to the S&P 500 average of like 2.4, 2.5, the price to sales ratio is like very high. So it kind of gives us, reason to be cautious of the current stock price. And similarly, we're looking at a price to earnings ratio of over 800, which generally speaking is like pretty absurd. However, they have almost no debt and they have a really high cash position, which they've been growing aggressively from the previous quarter. It's doubled to over $1 billion now, which generally speaking in times like this, when you're kind of like, we don't know how things are going to be growing. We're not sure how things are going to be changing because there's an election coming up. We don't know how long the pandemic's going to continue. There's all these different things that are providing uncertainty for us. But having a big cash stock basically reduces the amount of risk involved with any stock. Could be that there's a vaccine, in a couple of months, everybody's super healthy and fine again, and gyms open back up. That wouldn't bode very well for Peloton. But because they have so much cash on hand, that kind of reduces the risk associated with that. And they can transition to kind of a different type of business model or lower prices using that margin of safety that they have in their cash. So while we're seeing that they're being smart about paying off debt, and we're seeing that their revenues are growing, they still haven't completed an entire full year of profitability when you add up all the numbers over a 1-year period, even though last quarter looked so great. That being said, it's a relatively new company, so it's okay. It's not like crazy red alert or anything like that. It's just something to think about when you're looking at investing in this company. Management is expecting continued user growth through 2021 with the hope of adding about 200,000 users this quarter. They're currently around 1.3 million subscribers, and they're expecting to hit about 2 million subscribers within another year. They're also forecasting revenues up 218% year over year for the first quarter of this fiscal year to about 720, 730 million. So that's a lot to be excited about for Peloton. But what are the things that we need to be cautious about? What are the things that we should not be excited about? So I think threat number one to consider isn't necessarily like a threat of somebody coming at them. It's just kind of where they've positioned themselves in the market as a very premium, very expensive brand. Not everybody's going to be able to afford $2,000 or $4,000 equipment that you just plop in your family room. There are also not a lot of places in the world where getting equipment this big would comfortably fit into your living space, whether it's your apartment or your house. Here in Japan, there would be a very, very small segment of society that even if they could afford it, could actually fit something like that in their house. So by virtue of that, and this is also reflected in their usage statistics so far, basically they're kind of limited to North America, a little bit of Europe, a little bit of Asia and Africa, but we probably won't see nearly as much growth in those continents as we do in North America going into the future. It'll be hard for them to produce something that's like a $200 or $500 treadmill or bike without alienating a big part of their current existing user base and making them feel ripped off, or starting to dilute their brand and feel cheap or something like that. So as I mentioned earlier in the video, gyms, the natural competitor to things like this, may open up. I know a lot of gyms are starting to open back up and just say, yeah, you can come on in, just kind of use things at your own risk. Make sure you alcohol the equipment after you use it or things like that. I think Peloton is targeting precisely the type of people who aren't comfortable going back to the gym right now. But, with the potential of a vaccine coming out, I don't think we're going to see any really solid, super easy and super effective vaccine coming anytime in the short term. But even if it is 6 months or 12 months into the future or more than that, eventually I think people are going to want to go back out to the gyms. There will be a segment of people who are just like, screw that. I'm fine just working out at my home. I got my thing worked out. It's great. I don't have to waste time driving over to the gym anymore or dealing with lines or things like that. But I think once gyms do open back up, there will probably be some of the users who, kind of transition back into that. We are seeing potential competition from players like Amazon, who are kind of hinting like maybe we're going to be releasing a bike soon that's similar. And you can bet that Amazon is going to do that. And it's going to be way cheaper with a way cheaper monthly fee. And they're also going to be listening to everything that's said in that room for perpetuity as well. I mentioned earlier in the video, SoulCycle, a gym called Equinox has launched an app called Varus, not sure how to say it, but they have an app that's kind of similar. And it seems like they're kind of going after a similar target market. Equinox is also a very expensive, very premium gym. And so it'll be interesting to see how much they can chip into, Peloton's market share going forward here. But I think the biggest source of competition, the biggest fear that Peloton should have is Apple. Apple just recently announced their new Fitness Plus program, which pairs with your Apple Watch. And basically it's a program that you pay, I think it's $10 a month. It syncs with your workout history. It syncs with your, it already knows your body weight and kind of what kind of endurance you have. And it also displays all of the stats that your watch are taking, such as your heart rate, on the screen so you can see them. Check it out here. They have a bunch of info on their website. It says new workouts every week, workout how and where you want, coming late 2020 for $10 a month or $80 a year. If you get a new Apple Watch, you get 3 months for free. They show a bunch of different workouts actually. There's music displayed on the bottom right of the screen. There is all of the stats that your Apple Watch is displaying on the top left of the screen, as well as your rings on the top right. And apparently, similar to Peloton, they're partnering with professional trainers. I wouldn't be surprised if they had famous, athletes in the videos as well. So I think this program coming out by Apple is legit going to be a huge threat for Peloton. They're going to have to take emergency action. For me, I'm not really willing to go out and spend $2,000 or $4,000. I already have a $200 or $300 Apple Watch, and I'm kind of okay spending $10 if I'm going to be able to get a really professional, really comfortable, really clean kind of workout experience at home just by paying $10 and not having to go out spending a bunch more money on some equipment. Apple has announced that Apple Fitness Plus is going to be coming out kind of before the end of the year. So it'll be interesting to see how that steps onto Peloton's territory. Apple also mentioned that if you're already using some of their other subscription services like music or games or cloud, they're offering a new bundle that has a bunch of these things put together for an even cheaper price. So it could legit be like, oh, I only have to pay $5 a month to get Fitness Plus, and it's really, really high quality. So that makes basically the difference between Peloton is that you have this really nice equipment that costs $4,000 or $2,000 or whatever it is. So I think that's legit like a huge concern if you're a Peloton stockholder. So what am I thinking about doing with Peloton? I've never owned Peloton. I mentioned earlier in the video that I was kind of like meme stock, kind of skeptical of it, not really, it can be a pump and dumpy type like Robin Hood. Yeah, everybody rides it for like a month and then it goes up and then it's just like whoosh, kind of thing. Turns out it's actually a legit business model with a really cool niche, which I learned doing this analysis, but I'm really concerned for the future of it. It's really easy to get excited about the growth, which pretty much has come as a result of the pandemic. I don't think it would be growing nearly this quick if we weren't in pandemic phases. We see upsides such as really low debt, but we also see concerns such as really high PE ratios and things like that. So I think the stock, for me personally, isn't super duper appealing. I think there is some upside. I think if you bought it now at the 90, 95 bucks that it's at, I wouldn't be surprised if it breaks 100, 110, 120. I doubt we're gonna see 200, 300, 400 going into the future. And again, I'm really concerned about players like Apple coming into this territory. If you already hold the stock, I would probably suggest that you could take some profits, keep some for, potential future growth or things like that. Personally, I'm a big Apple shareholder. I'm not gonna be buying any Peloton, but I can't hate on you if you own some of the stock and if you're kind of, holding some longer term. I think this whole market segment of like working out at home is going to be growing into the future for sure, as people become more and more kind of germ conscious. So those are my thoughts on the stock. I'm really interested in hearing your thoughts going forward in the comments section below. Do you think it's going to be growing really big time into the future? Do you think they're really going to be able to reach those growth forecasts that management is very optimistically looking forward to? Or do you think it's going to be kind of downhill from here? Again, thank you guys very much for watching the whole video. I know there are a lot of different YouTube channels out there that you can choose from, so I thank you very much for your time watching this whole video. Again, please join us in the comment section below or over on our subreddit. So thank you guys very much for your time. Love you guys and have a great one.